In terms of multiples, the internal rate of return on the transaction at $22 silver is about 18%, and we're paying about 0.8 times NPV.
Talking silver here with Silver Crown Royalties, and Peter, you've recently sealed a deal with Pilar.
We did. We announced a transaction, definitive agreement. There still are some conditions that need to be met in order for the transaction to close, but it's a $2 million US upfront cash payment with a $1.5 million bonus payment for 90% of their silver, with minimum delivery of 16,000 ounces over 10 years. That could step up to 32,000 ounces for the additional $1.5 million equity bonus payment. Pilar is a 5 million ounce gold ore body with silver as a byproduct. The ratio there is about 0.3, 0.4 to 1 times silver to gold. So there's about 1.5 million ounces of silver in the ground there. And the company is expected to produce 80, 100,000 ounces of gold a year. So they should be able to reach that upper target of 32,000 ounces in time. Again, $2 million up front, 16,000 ounces a year minimum delivery obligation from Pilar to us.
Peter, perhaps you can also dive into how this deal works, because you said a minimum of 16,000 ounces, and then, of course, if you have the additional payment, a higher number. But what is the maximum? How does this deal look like?
Right, so there is no maximum. We get the higher of 90% of the silver that is produced from the mill, or 16,000 ounces minimum. So whichever number is higher. So for instance, if they produce 22,000 ounces of silver, we'll get 20,000 ounces. If they produce 15,000 ounces, we get 16,000 ounces. In terms of multiples, the internal rate of return on the transaction at $22 silver is about 18%, fully taxed for the Canadian corporate tax rate. And we're paying about 0.8 times NPV in terms of the 5% discounted NPV valuation.
Okay, Peter, for those viewers not that familiar with the royalty space, could you just explain on this example where the additional value is being created? Why is Pilar not selling the silver on the London Metal Exchange, for example?
So the reason why is because the product that they produce is a doré bar that has gold and silver in it, and they sell that doré bar to a refiner locally in Brazil from the mine. So they get a cash check for the metal content of that doré bar, of which almost 100%, very close to 100%, but 99+% is gold, and the remainder is silver. So the silver is such a small component for the company that it doesn't make any relevant sense for them to wait 10, 20 years to get that $2 million worth. It's a lot easier for them to just get a cash check from us up front and give up a very, very minuscule portion of the overall production. Another interesting point is that in Brazil, very few people report silver for various tax reasons. So you will have operations out there that do produce silver, but don't have it in their resources and don't have it in their balance sheet or in their income statement. And that's the case here with Pilar.
Okay, and then looking at current silver market prices, I read about record solar deployments week on week. Silver is a key component in solar panels. The silver market's not picking up. When is supply and demand, or when is at least the supply going to catch up in terms of price with the demand?
Well, I think gradually it has over time. If we look at where silver was this time last year, it was not, it was good 15, 20% less than where it is, maybe high teens, low 20s. We're at $23, $24. We've seen 25, close to 26 recently. So I think that it is trickling through. The bigger short-term impact to the price of silver as well as to gold has been central bank rate policy. And we've seen that internationally. So it's not just the United States, whether or not the Fed will pause or whether there's going to be another increase, but we've seen Bank of Canada recently stop hiking, and we've seen other places. In fact, I believe there was a cut somewhere in Asia, and you have a lot of pumping going on in China as well as they try to offset their decline, especially in the real estate segment. So this all plays positive for the US dollar, which obviously gold and silver are denominated in. So we've seen the dollar outperform other currencies, continue to outperform other currencies over the last few months, going from 100 on the Dixie to 104. And obviously that's had a negative impact on the pricing of silver and gold. So that's the corollary to the supply-demand imbalance that you're pointing out. And those underlying forces certainly are there. And I think that in time that continues to play through and the upward pressure on silver continues to remain. So my personal opinion, and I think that we've spoken about this before, is that you can expect silver on a relative basis to go up 10 to 15% relative to other metals and in dollar terms as well.
Sounds like a great outlook for silver, but then again, Peter, when can we invest in your company? What's the roadmap for the IPO?
Well, we're doing a private raise right now. It is a pre-IPO raise, so this will be our last raise before we do go public. We are raising between $6 and $11 million, of which about $1.5 million is soft spoken for. We can go public with the $6 million, so it really depends on how long it takes us to get to that level, and then it's going to take another 3 to 4 months after that to list. So we think that we can be public on an aggressive basis in Q1 2024, conservative Q2 2024. So in our presentation, it says H1 next year. Obviously, I'd like to be public as quickly as possible.